What's up? Here to learn to share. What you got? What you got for me? What you got? What you got for me? Y'all pull up with the hard hitting questions, man. I'm just getting this together to can't nobody make sure can't nobody uh I don't chart on Ninja Trader as much as I used to, simply because I'm lazy. Um simply because I'm lazy. But I used to only chart on Ninja Trader because I didn't use Trading View for charting. But I like the simplicity of Trading View when it comes to grouping stuff together, when it comes to like applying templates. It's more seamless. It's a more seamless process. But I used to love charting on Ninja Trader back in the day. Price seems to just be chopping again, probably because of GDP tomorrow. But yeah, I used to love charting on Ninja Trader. Um, you have different little shortcuts for all of the tools. Um, Same thing, like I get me a horizontal line on here, right? You like I could right click on Trading View and just go to templates. But on here, if I right click, I got to go to properties or just double click it to open up the properties. And then to add a template, then I got to click template. I got to click load. Then I got to click buy side liquidity and hit apply. You know what I'm saying? And then another thing about Ninja Trader, you can't put words on the lines. Like it was like it started getting too sloppy where I'll put a line there and then I would have to come get like a text thing. Then I have to put text there and put buy side liquidity. You know what I'm saying? And then, anchor it to where I wanted it anchored. It was too clunky and it was just more seamless on Trading View. That's why I stopped charting on Ninja Trader. And now when I trade, y'all know I have my sim up to control my trade copier. And then I have my other stuff over here. Like I have like my personal account over here. You know what I'm saying? You see it got like the name, like, you know what I'm saying? It's like you can always tell what the thing is. It's got like my name over there, and then I have like PA accounts. You know what I'm saying? Like you see, like it'll say PA, right? The name starts with PA, right? On the Apex name, and then I have eval accounts. Any eval accounts that I'm in, you would know that because it says it starts with Apex, right? It starts with Apex over there. Any evaluation accounts that I'm doing, you know what I'm saying? And I just keep and then the trade copier is all I got to do is just trade on this one here, and it copies it to the other accounts that is logged into. So what I do now, I just I keep my Trading View. Like my Trading View would be here. This is exactly what it look. Y'all can't see my other screen, but this is exactly what it looks like when I'm trading. Right. I put this here like that. Why is that like that? Well, I put this here like that. And then I just keep that peeking out right there on a 1 minute chart. It's just peeking out right there on a 1 minute chart. And then I'll have my TDA on here like this right here. And I'm watching it. And then I see, like on my other screen, I got like all the time frames there, and whatever time frame I want to watch on Trading View with my PD arrays. Like if I want to just watch the 5 minute, you know what I'm saying? Or I keep that 1 minute, and I got all the other, I got 60 minute, 15 minute, 5 minute, 1 minute, 15, 30 second, 15 second on my screen over here from Ninja Trader, right? This is like my 30-second chart right there. Ain't nothing, this one ain't connected to no account. It's just blank. But that's my 30-second chart there. You know what I'm saying? But I look at the drawings on TradingView like this right here. So I know, okay, I'm coming up to this, I'm coming up to that. I can quickly jump and check it on the get back over there. I can quickly jump and check it on the 60-minute, check it on the 4-hour. I can quickly jump there, or I could just look at the Ninja Trader. But if I want to see what it look like with my PD arrays already drawn out, I can quickly jump there to see what it look like on the higher time frame. And then just say, I'll be like, if I say, okay, I think we're just say in this case, I think we're bearish, and we gonna sell, we gonna drop after we come up into this fair value gap right here. So I'll just look up there, I'll be like, okay, that's 45, 60, 50. Then I come over here to 45, 60, 50. I come over here to 45, 60, 50, whatever that is. This is like super far away. I don't usually be this far away, but 45, 60, 50. I just come here and I right click and I'll just put sell one right there. And then, you know what I'm saying, that'll be my entry, and price come up and get me. And then, as you see, and then on the trade copier, you see over here, it copies it to that over there. You know what I'm saying? It copies it for you.
Order canceled.
Get that out of there before it come pick me up for real. I know you just asked me about charting on Ninja Trade, and I just went crazy. I just went crazy. I forgot to mention that you sync objects across all time frames by clicking on the chain, locking things left. Oh yeah, that, and I think, and that's inside the do it go through the windows? That's how you do it? Is that how you do it? To put it on that left side? To put it on that left side? I know I had it synced for something, and it was like changing it in the main one. Let's see. I had something synced. You said click it on the chain. It's see, I got that right there. I can't remember how I put that there. See how I got the little thing down there? I can't remember how I did that. Okay, yeah, there it is. That's how you do it. Appreciate that. With that, I can't remember how I did it though, because I got it there. Because see, it just showed up on that thing there. When I hide my IPTA, it pops up on that side there. But I can't remember how I did it. So for that person, if you're looking at this, that's how you do it. In the other video, when I said that right now, that's how you do it. You need the link. Hey, you ask how I use it. That's how I use it. Appreciate that, Will. Appreciate that. Okay. I can't remember how to even do that now, so it's neither here nor there. Tradeovate purchased Ninja Trader. Have you thought about using Tradeovate and trading through Trader? No, I haven't. I'm a creature of habit. I'm used to trading on Ninja Trader. I don't feel like switching over to nothing else. God dog it. Oh, there it is. I kicked my camera. Bang. I don't feel like switching over to nothing else. So, and I'm used to trading on Ninja Trader. I would have to learn how to trade on TradingView, and I just ain't got time for that. I know that you are a fair value gap trader. Is it necessary to learn each PD array if fair value gaps is your PD array of choice? Do you use different PD arrays? You don't have to learn other PD arrays to trade fair value gaps. What learning the other PD arrays do, it helps you to understand the narrative of order flow. That's why I personally wanted to learn all the PD arrays and what they were. So when I see price approaching a price level, I understand why it's reacting at that price level. You know, like if you're a fair value gap trader, right? If you're a fair value gap trader and you're looking at this fair value gap right here, okay? So when price comes up into this fair value gap here, right? Understanding PD arrays, you could say, okay, we came up into this fair value gap, but we stopped at this breaker, but we stopped at this mitigation block. You see what I'm saying? It's like you can understand why price is doing what price is doing. Price came back to a bearish breaker. Price came back to a mitigation block, right? And that's what gave you this institutional order flow entry drill on this fair value gap, right? This breaker and this mitigation block was telling price, hey, don't feel this imbalance right now. I left this breaker and mitigation block here for a reason. That's the only, you don't need to know that that's a mitigation block. You don't need to know that that's a breaker in order to trade off of this fair value gap. But understanding what a breaker's job is, understanding what a mitigation block job is, understanding how to identify them, let you understand the narrative of why we stopped right there and didn't feel it at that point in time. I probably should have asked on the Trading View Live, but how do you determine which PD arrays / markings need to be visible on which time frame? It's determined by the time frame that it's on. That's the way that I do it. I learned that from Michael. This is a 15-minute fair value gap right here, right? I'm looking at the 15-minute chart. This is a 15-minute fair value gap. So when I mark out that fair value gap on the 15-minute, I'll right click it. I'll go to visible on. I'll say current interval and below. And the reason why I say current interval and below is because this is the most important thing on this time frame and below. Everybody under this right here is subordinate to this PD array. And I want to see how the 15-minute candles react to this PD array. This lets me know if we're still respecting premium PD arrays or disrespecting premium or respecting discount. And so when I go up to 60 minutes, I can't see that fair value gap because it's a non-factor to the 60-minute time frame as far as, you know what I'm saying, like I'm not gonna say a non-factor, but the 60-minute has more importance. You know what I'm saying? So on the 60-minute, I want to be able to see the 60-minute and the higher time frames. I don't want to be able to see the lower time frames because it start to get junky and clunky, right? It start to get junky and clunky, but that lets me know what time frame. So when I go down to 5-minute, I can still see it. I know, hey, there's a 15-minute fair value gap right there, right? Go down to a 1-minute. I can still see, hey, there's a 15-minute fair value gap right here because mine be named. It's like if I go in and put my actual, right? Go back up to 15-minute and put that on current interval and below, go back down to 1 minute. Hey, there's a 15-minute fair value gap right there that we're running. We're running into a higher time frame fair value gap because I'm on the 1 minute, right? But when I go to the 60-minute, right, this is a 4-hour fair value gap down here. We're coming down to a higher time frame fair value gap, right? Now on the 1 hour, We can wick all around it. We can do everything we want to do. Now let's look at the 4 hour. We finally got a closure below that fair value gap on the 4 hour. Remember this 4 hour fair value gap right here? We had been respecting this bullish fair value gap, right? We created the fair value gap over here, right? We touched it there, came close to it, came back to it again, closed above it, came back to it again, closed right at the top of it, closed above it again, respected, came down, respected, and then now we finally closed below it. This is the first time we closed below that fair value gap on the 4 hour. Now, I know this ain't what we talk about, but I done got into talk about price. Now we're looking at this order block right there. So we've closed below this 4 hour fair value gap, right? That's starting to show a little weakness. Before we were respecting it, but now the 4 hour is starting to show weakness because we closed below this fair value gap. Now looking at that 4 hour order block, we closed above mean threshold, right? We went down, but we're still respecting that order block. So on the 4 hour, you want to see how we close in reference to the mean threshold of that order block on the 4 hour basis. It don't have to be this candle, but since it's a 4 hour PD array, any 4 hour candle after this PD array is made, you want to see how it responds to that particular PD array until it does its job or doesn't does its job. Help you less again. It help you with understanding the narrative of price action. I'm a fair value gap trader, but I watch the other PD arrays to see, are we still respecting these PD arrays? Should I go long off of this fair value gap? Should I leave it alone? This is how I make my decisions, because I trade the fair value gaps, but I look at how prices reacted to the other PD arrays to let me know if I'm on the right side of the trade or not. Yep. Well, that's what I was talking about. You're welcome. Thanks, Tim, for that gem. That's going to clear my charts up a lot. Oh, yeah. When Michael put me up onto that, man, I was like, wait a minute. I never knew, in my Tony Baker voice. So if you have a monthly PDA, you want that visible on every time frame below the month. Seems like it makes the chart too busy. It just preference. Like right now, looking at the monthly right now, the only thing that I have marked on the monthly right now is a high. Right, is a high, a monthly buy side liquidity. That's the only thing I have marked on the monthly. Right, but back when we were watching this monthly fair value gap right here, right, while we was watching that monthly fair value gap right there, right, if it start to get junky, right, what I'll do, right, so let's do this right here. Let's cut all this off. To there. Okay, so now we've come back down into this monthly fair value gap right here, right? That's the monthly. And on a weekly basis, right, I don't have any, like, this is a monthly fair value gap there. So on a weekly basis, up until here, right, I didn't have anything to put on the charts. So now that we got a weekly fair value gap here that I would be of interest of putting on the charts, right, what I would do, and we're going to use this little guy right here, like that. So what I would do, and this is just, it's all personal preference, right? On here, I will put current interval and below on this weekly. I need that. Hold on. I'll put current interval and below on the weekly, and then on the monthly, I would come here and I would say current interval only, because the monthly is higher than the weekly, right? So when I come to the monthly, I want to see this monthly PDA rate. And then when I go to the weekly, right, I only see the weekly in that area. But I have to keep in mind that that monthly is still, you know what I'm saying, relevant. That's how I do it. You know what I'm saying? Like if it start getting too clunky, like I got to remember that. And then sometimes what I'll do, right, and so I won't forget, sometimes what I'll do, I'll put in like a reminder, something like this, and I'll put bearish fair value gap low month, right? I'll put a line there like that, and then I put this for current interval and below. So when I go down to the weekly, right, now I know that's the low for my monthly fair value gap right there. And then that's the, you know, unless that look too junky, but it is personal preference how you want to, you know what I'm saying, for dangle and manipulate your charts. But you know, it is power in the click. There's power in the click. We're running. Anything else? You're welcome. Anything else? Appreciate y'all for pulling up with the hard-hitting questions. Pulling up with the hard-hitting questions. Get out of here. How frame is this? Oh, that's on the monthly. Oh, that's the one I just did. Get out of there, monthly. And then I'll be doing stuff to like help me like visualize stuff when I'm like practicing. You see, I got this right here that say like last week lines, and what that is. Let's go to 60 minutes. Don't look like I've done it in a while. I haven't. All right. So what that is, I haven't done it in a minute. All right. So it lets me look at price and see what like over days, right? Over days, and I got it set to each line right there is set at 12 a.m. Right, each like Monday, Tuesday, Wednesday, Thursday, Friday is set at 12 a.m. Right, and it just lets me look at price like through the days. I be doing stuff like that when I'm looking back through price, see how price moved around. Right, if I want to look at what price did over a week. Right, so that's Monday through Friday. Right. Yeah. It overlap a little bit, but you get the gist of it. Monday through Friday. And you can see how price went up that week. Then I'll go through and see, you know what I'm saying, what PD arrays it played off of. Okay, we came up, we took out this buy side, came back down, filled that imbalance to that order block, right? Came up, took that buy side, came back down to that order block, came back up, took that buy side, consolidated, came back down into the order blocks. You know what I'm saying? Right there. I just go back and look at price, see what it did like that. I be doing stuff like that. Then I have, y'all know I got my kill zones that I be using sometime. what's that? Last week lines. Get out of here. Right. So I got my kill zones. Let me find those. That it there. Yes, there they go right there. Right. So I got my kill zones that I'll be utilizing. Put it on 15 minutes. There you go. All right. So I got my kill zones there that I'll be utilizing so I can see what price did during the kill zones. Right. Got it set up. London kill zone just consolidated. Then from 5 to 7:30, that's like the dead zone. Then the New York open kill zone, London close, lunch, then New York PM, and then I don't mark out I don't separate out the last hour. I just do the PM as one whole thing. Kill zone, so I can see how price moved throughout the different kill zones when I be going back and studying sometime, like so I can visually see the windows. So I can visually see the windows. I have that marked out, and it's inside a folder named kill zones. You know, just different things that I use from time to, and like I said today, I made these lines right here that I just called session opens, right? Just so I can have something to put into a folder to show how I did it, how to do that. But this is like at 6 p.m., 3 a.m., and then 9:30 a.m., right? It's for the Asian, the Sydney, the London, and the New York. Though, you know, like if you want to be a person who be like, okay, I want to see what time the session start and what price did from like start to start. And as you can see here, we consolidated. We took out sell side, traded back up into the imbalance, took out sell side again, and now we're just kind of hanging out there, right? And you always remember, you always want to sell in the premium, buying a discount, right? And it's just about getting in sync with the algorithm, seeing which price leg it's paying the most attention to. You see here, when we consolidate, had a breaking mark structure to the downside. And then as you see, price went back into a premium to an imbalance, right? Came back to a premium to an imbalance. Like I said, came back to, there's a breaker over there, mitigation block over here, but it came back to a premium into an imbalance, right? Dilly-dally during the dead zone, you know what I'm saying? And then as we start coming closer to the New York kill zone, start to sell off, took out sell side again, right? So now, in the meantime, you'll be watching that price leg. You can look at that little piece if you want. You can look at the full price leg if you want. It's all about, you know what I'm saying, what's your time horizon you're watching, right? And now down here, it was in a discount. You can say, hey, we just swept sell side and we wick back up immediately. Okay, I'm gonna look at this as a balanced price range. So I want to buy in a discount back to some type of premium, right? And then you look to see, okay, are there any imbalances here? You got one imbalance there in the discount. You got one imbalance there. And thus far, all of the candles are respecting this last imbalance right there. Thus far, on the 15-minute time frame, all the bodies of the candles are still respecting that one. And you wait to see that candle, all of them respecting that one. Now you watching this one to see, do we get a closure above that 15-minute? Right, we're in a premium now, so you would want to be selling in a premium, right? And this candle supports that, this candle supports that, this candle supports that, this candle supports that. If you didn't take profit on any of these run down and you're still holding it, now you're looking to see, hey, are we going to keep respecting this this PD array, right? But when you start getting candles that's coming up and taking out highs, how we came up here, we wicked and we took out that high, starting to look bad for the home team, because you're respecting the PD array here, but now you're taking out highs. Because the more you respect this PD array, the more people are going to move their stops down, because now they're looking at this as support. People start moving their stops down. Then when you start taking out buy side, you're fueling the fire to push back up for people who want to get short above midnight and come back and finish off this imbalance up here. Right, this sell side down here might have been just enough to push price back up to finish this imbalance. Might have been just enough to push price up to get a break in market structure to continue up. Let's see what the dollar doing. The dollar still ho humming. The dollar moving down, right? The dollar still moving down. Let's see where the dollar trying to get to. Go to a daily. The dollar just tapped into this sell side right here. Dollar just tapped to the sell side from 30 August at 102.936. This low right here is 102.894. So the dollar just tapped into that sell side right there. Right, dollar had been trying to make it down there. We have been talking about that for a while. Dollar had been trying to make it to that sell side. It just tapped it. So now will the dollar start to bounce off that sell side? And if the dollar bounce off that sell side, that should lend to weaker indexes. It should lend to weaker indexes. Where can the indexes go if the dollar starts to get strong? I'm just running my mouth because I don't see no more questions. The dollar started to get strong. Remember that candle, that daily candle we was talking about does this daily candle support price? Right? It's been this down close candle. We respected it that day. What I mean by respecting, I'm looking at the mean threshold of that day. We came right down to the mean threshold to the tick and pushed back up and closed. Right? Here we are today. We wick down below the mean threshold, but see how we close out. This is a daily candle. So at the close of business today, how does this candle close in relations to that down close candle? All right, that's what you want to see. Now, if the dollar starts to get strong and pulls and the indexes start to get weak, where can the ES go? Right, looking at the ES. The buy side draw on the weekly time frame is up here. We already hit. I took the daily off. This was our daily draw. There, we hit our daily draw. Boom. We're fighting with that daily draw. Right? We're consolidating. What do they call that? Engineering liquidity. So, which way does it want to go? Who knows? And who cares? We don't guess. What do we wait for? We wait for some type of displacement away from this consolidation. If we get displacement lower, right? They say like on the 4 hour and lower, we start to displace lower. We get displacement lower on the 4 hour. Boom. We're consolidating on the 4 hour. We get displacement down here, right? Then we can look for a reason to short off of the 4 hour to come down into this daily fair value gap. Right? That's the only daily imbalance below price right now. Come down, maybe get an institutional order flow entry drill on that. You mark this out, you grade it, right? Because we already tapped into it one time. That's the first time we tapped into it right there, right? And then let's grade it, right? We still haven't hit the 25%. That right there was the first institutional order flow entry drill. We didn't even get down to the 25% of that imbalance, right? Come down, maybe tap the 25%, maybe tap the 50%, and then go take out that weekly high. Or this down close candle right there, because the job of these down close candles is to support price, right? Every down close candle is not going to be an order block, but when you're in an uptrend, every down close candle job is to support price. You know what I'm saying? Like, just because it's supporting price don't make it an order block. The order block got specific criteria. You got to come to a level of, you already know all that. Right? So here there. Was the kill zone set up an indicator you created, or is the indicator you select off? Nah, I draw everything out. I don't use no indicators. The only indicators I use, shout out Robinson, is the DR IDR. That's the only indicator that I use because I'm not fun to sit there and draw that out. I'm not gonna draw that out. That's like too much. So it's set, it's designed to work off of 5-minute charts. That's how the guy who set it up do it, off a 5-minute chart. So you have it on 5-minute, and then it's called DR IDR right there. Boom. And it like has like a whole bunch of other stuff that be set up. But DR was busting heads today. It confirmed up right there, and then when it traded back down into it, you would have got long and then got your head busted in because it went all the way down at the bottom. Right? So DR was busting heads this morning. And now we still haven't had a DR confirmation yet, but this was a head buster. Last night, DR was busting heads last night. It confirmed up there, and then it confirmed up here. Well, it went right back in there. And so 63, and it went all the way. Nope, that's only like 1 point. Yeah, so DR was busting heads last night because it never went up. Then it just dropped. DR was busting heads, but that's the only indicator that I will pop on. But I don't trade DR, but that's the only indicator that I ever put on. I don't use any indicators anymore. I used to use RSI, MACD, and Bollinger Bands. Those were the different indicators that I used to use, but I utilize them no more. I only study the price based off of how it's reacting to the PD arrays. How it's acting to the PD arrays. Okay. Oh, we just talking about something. I was just talking about something. I can't remember what it was. I can't remember what it was. I was talking about something. Oh, I was saying this might have been just enough to push up. We was looking at one of these fair value gaps. Was it here? Yeah, I think it was this one here. We was looking at this fair value gap. Was it? Was it this one? Was it? I was looking at something, and I was like, yeah, it was 15 minutes. It was the 15-minute. Now it's like we've been respecting it with the bodies, but then I was like, but we just took out that high. Remember when I was saying that? I was like, we just took out that high, and that's not looking good for the home team. Then look at that. Pang! I'm just a dude from Fort Lauderdale, Florida, man. I just read these candles. It ain't magic. No indicators, no nothing. Well, I said this, all these candles was respecting this fair value gap, but then this candle here came and took out that buy side, because the more you respect it, the more stops are going to come here. And now that we've attacked that buy side, it's not looking good for the home team. And then inside this same candle, while we just sitting here on live together, what happened? So do me a favor. If you remember me saying all of that, what I just said about respecting this, and then once this candle took out that high, it wasn't looking good for the home team, because this sell side could have been just enough to come up here and take out this high, or even come rebalance this, reprice this fair value gap. Put a 1 in the chat for me, because you see it played out right there in real time. It played out right there in real time. If you heard me say that, if you remember me saying that, and you saw it happen, put a 1 in the chat for me, please. Was that also a turtle soup? Nah, a turtle soup. This right here would be the turtle soup right there. That would be the turtle soup right here at so when it's 3:30 candle came down in here, and then this 345 candle, it just reversed and went back up. That's the turtle soup right there. Right, that would be the turtle soup. You can say that this would be your turtle soup entry here on the 8 o'clock candle, because the turtle soup is you're just buying soon as it go below the low, right? So you're buying on this 330 candle right here because it went below the low, right? And then you took it back up to there. You bought on this 8 o'clock candle, right? And then this 8 o'clock candle would have been your, well, actually this 745 candle would have been your turtle soup. You just would have took more heat than you took here. So this one here might have stopped you out if you didn't have a big stop loss. But this one here, you was Gucci because it wasn't nothing but like 3 points. Wasn't even 3 points. Wasn't even 3 points. It was like, you know, less than 2 points. This one here was 5 points. Right, this one was 5 points. If you had less than 10 points, you might have got stopped out, but that would have been your turtle soup entry. That would have been your turtle soup entry right there. Boom, look at there. Gone. Just said that. All from what? I'm a fair value gap trader. So I said, hey, we've respected it. 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 But when we did it this time, we took out some buy side. How do you know we took out buy side, right? We have a swing high here. We have a swing high here, right? We're constantly butting up against this area. So somebody felt safe to bring their stops down. Their stop just got tapped. When it wicked back down, somebody else said, ha, 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 now I'm going to move. Ha, 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 now you just got took. All right. Consumer confidence at 10 a.m. 10 o'clock candle right here. Right there. So they didn't really use the news to do much today. The news was like a non-factor today. And then 30 minutes after the news, it went crazy. Yep. 30 minutes after the news, it went crazy. Somebody may have said something in relations to the news. You never know. Somebody may have said something in relations to the news. Somebody, you know. And this is going crazy. Man, when I was up this morning trying to get long down here in this area here, I was trying to get long in this area right here. Got a small little scalp out of it. Right. This is what I was wanting over here. Because we had come down, taken out sell side. We were in a discount. We had taken out the sell side from the prior day, right? And I was looking for something like this. Got a nice little, a smaller scalp. I ain't gonna say nice, smaller scalp this morning over here. But this is the move I was wanting. I was wanting to come back and attack these highs over here. Like all of these highs here, all these relative equal highs there, that swing high over there. I was wanting to attack it like that right there. That's what I was wanting back here during the London. Meet me at the London. On the 5 minute was a clean entry at 1025. Right here, coming into that fair value gap right there. Right there. Now, again, look at this right here. Looking at this fair value gap right there. Right. Looking at this fair value gap right here. All right. We come up, break, had a break in market structure there. All right. What does that break in market structure right here? When we wicked up there, hit that, what does that break in market structure yield us? Let's go back. Put that back there. put that there. You know, we got this little fair value gap right here. Right. So this was the 15-minute, man. We said it was respecting, right? Respecting. Right. And then we came up on that 15-minute when we wicked up and took out that buy side right there. Right. That break in market structure right there. What did that give us? That gave us displacement. There's your fair value gap, the expansion with displacement. We're consolidating, right? We're consolidating here. We expand up with displacement, taking out a high and a fair value gap, right? So now, what does that yield us? We know when price consolidates and expands, if it expands with displacement, right, that gives us an order block right here, right? That gives us an order block. If you're not a person that likes to do the wicks and all of that right there, that's how you place it. But that gives you an order block there. Let's make this orange since we got so much going on. Right, we're going to make that orange. And we're going to mark out the middle line there. Remember, this is our 15-minute PD array that we was respecting. Then that 15-minute came up and took out that buy side, right? It also gave us a breaker here, right? We got breaker. Gonna make the breaker blue, right? Technically, it's 2 candles, so that's the entire breaker right there. But we're just looking at the last up close there, and we have our bullish fair value gap right there. So we had consolidation with expansion with displacement yielding us a order block. Where will the order block be? The order block will be at or near equilibrium. It's going to be at or near equilibrium of the consolidation. Where's the order block? At or near equilibrium of the consolidation. There's your order block right there. Here's your breaker right here. A high, low, higher high. Trade back down into your breaker. Come back down into your order block. Like I said, this is your entire breaker right there, right? Mean threshold of your breaker, right? That's mean threshold of your order block. You have your fair value gap, and then nothing can stop me. I'm all the way up. That's AMD right there. Accumulation, manipulation, a distribution. This ain't really AMD, right? AMD would be more so from over here. The AMD would be more so from over here in like a totality time frame, right? So let's go back. Right. So we're gonna go back. Let's go all the way back to the start of the day. Right. So looking at the start of the day, right? If price, let's just say for the day, price continues up and we close up at the high, right? Then from the open, right? You open, you'll be coming here like that, here like that, here like that. See, because we opened here, right? It's the opening. Your opening price is around here somewhere. I don't got it right on there, but right, that's your opening price there. Right, so you're accumulating orders. Right, drop down. Right, so now what happened? Right, you trick people to go short. Right, you came here, you drop down. People said, "Oh, we going short." Right, took out the sell side, came back up, got more short orders, dropped down, took out sell side again, and then now pow. Right, so this would be the accumulation, the manipulation, then the distribution. Right, you will come up here, all of these orders that you accumulated down here by coming down below all this sell side, you'll go up here and distribute them above these highs. Accumulation, manipulation, then distribution up there. Does that make sense? Does that make sense? And then remember, you constantly distributing every time you go above a high, distributing something there, distributing something there, distributing something there, right? Sometimes you may not get all the way up there because every time you pass a high, they distributing something there, distributing something there, distributing, and we rip through all this right here. The way we rip through all that, you know, that lends more to say, hey, we gonna hit that one, right? Because we just peeled nonstop through all of this. That lends to, yeah, we are gonna distribute the rest of them up here somewhere. Don't have to be, because like I say, you take off some, you take off some, you take off some, but the way we ripped, yeah, that lends me to think, hey, we gonna the final distribution gonna be above that high because we took out the daily sell side and we ripping toward the prior day's high, because what we've done, we've taken on a daily time frame level, we've taken out external liquidity, and now inside here, I'm all the way down to 5 minute right now. Right, you go to a 4 hour. Inside that, there's no 4 hour imbalance up here. Right, there's no 60-minute imbalance up. That's the last 60-minute imbalance right there. There's no 60-minute imbalance up here. Right, there's no 15-minute imbalance up here. Right, 15-minute, we closed all the way up here above that high. There's no 15-minute imbalance up there. There's no 5-minute imbalance up here. All right, and then I'm not gonna go down to the one, all that right there. Right, so you've taken out external liquidity, and we've moved all the way up past every internal imbalance. Right, so now the only thing we have now is internal imbalances on this price leg right here. Right, so coming from here up, we got internal liquidity on this price leg, but there's no more internal liquidity on this price leg right there. The only thing left is external. Only things left is external. So if this buy program is to continue, come back down, take care of a certain level of internal liquidity on this price leg, right? Prime would be come to this fair value gap because it's in line with the breaker over here. This is just a pretty much a standalone fair value gap. Yeah, true is like PD array over here, but in the most current price leg right here, the breaker is all the way down here. So coming to the low of this fair value gap, maybe even get an institutional order flow entry drill to come back into a discount on this price leg right there. But you also got to look at all of this is a balanced price range down there. So we may use this piece of price leg right there. And that right there just came to equilibrium, right? Because you got the balanced price range there, and coming from here up, that just came to equilibrium. So that may be enough for the algorithm to continue. I am getting hungry. I got to go try on my tux at 12. So I'm gonna go ahead and call it. I appreciate y'all for pulling up with the hard hitting questions, man. I love running my mouth about this stuff. Today I could have got a trade today, but since I traded a little bit during the London, no harm, no foul, no biggie. Just was trying to shed a little light for those who desire to learn this stuff and don't desire to spend $19.95 on courses, $4,000 on courses, $5,000 on courses, $1,000 on courses, $500 on courses, whatever you spend on courses. There's nothing wrong with buying courses. Let me put it there. There's nothing wrong with buying courses. If you want to join a community, there's nothing wrong with that. You know, whatever floats your boat. But everything you need to know about trading, period, can be found for free on Al Gore's internet. It can be found for free. If you want to pay somebody to sit down and organize it for you in a course, so be it. So be it. I have no knock against people charging for their knowledge, no knock against people charging for their time, because I charge for my time. If it ain't at a point where I feel like sitting down on Al Gore's internet, you gotta pay me. You gotta pay me. Like, people been asking me, you know what I'm saying, when I'm gonna do another tape reading with Timmy. Week, like a whole week. I probably won't, unless it's like a paid thing. This is like a paid thing. It won't be a lot of money, but I'm gonna get something out of it, because when I do tape reading with Timmy, I got to get up and trade to London. You know what I'm saying? To look for trades during the London, because I want to focus all my attention on just reading the tape with y'all and not worry about trying to take trades. So that's eating away from my time. Will I do something like, you know what I'm saying, $25, $50 for a week to do tape reading with Timmy? Yeah, I'll do something like that. Yeah, that's a good idea. There you go. If y'all want tape reading with Timmy to be, you know what I'm saying, a continual thing, hit me up and be like, hey, I'm interested in doing it. Mind you, that every time we do it, it'll be $50 for the week. And it'll only be the people who pay the $50 a week. It'll be in a private video, a private video format. It'll be, you know what I'm saying, private video format. $50. And we'll do it. But it's got to be, it can't just be one person that say, yeah, I want it. It can't just be one person. And we'll do it as many times as y'all want to. As long as there's enough people pulling up. As long as enough people pulling up, hey, we'll do it. Yes, I'll let my sweetie know. I'll let her know. How y'all know my sweetie birthday tomorrow? How y'all know my sweetie birthday tomorrow? She got it on social media. She been social mediaing. Hey, did I? Hey, let me show, before we go, let me show y'all this right here. My sweetie, she was recording me when we was at the Usher concert. Was that, and the DJ was playing Wipe Me Down before Usher came out, and she done caught me jigging. There it go, right there. They gonna if I play the music, they gonna block this. If I play the music, they gonna block this. I ain't gonna play the music. I don't know if y'all can see it. It's glaring. She caught when I was wiping me down. I can't. I don't know if y'all can see it. She caught me jigging. Yeah. Oh, I told y'all. Oh, yeah. Anyway, let's see. Can I see? Save the Dropbox. Save. I ain't gonna play the sound because they're gonna be talking some. You played my music. She up there record me. She record me. She caught me jigging, record me. I said, you was recording me. You was recording me. We had a good time at the concert, man. We had a good time in Vegas. I don't know what's up with that Vegas weather, man. Vegas had my lips so chapped. It was crazy. My lips was so my lips don't never get chapped. They were so chapped out there in Vegas. Hey man, I appreciate y'all for hanging out with me. I appreciate y'all for pulling up with the hard-hitting questions. Hopefully, I was able to shed light on something for somebody. If I didn't share anything of value for you, I promise you, I'll try my best the next time. The next time I decide to get on Al Gore's internet, y'all know who it is. It's your boy, Aranya Grande, aka Big Spider. Gone.